You open your banking app and the number is wrong. Not a little wrong, 0 wrong, or maybe minus $400 wrong. The money disappeared. Now what? That's the question. And the answer is a federal law called Regulation E. It doesn't care about your panic. It cares about clocks. Specifically, a 2-day clock and a 60-day clock. Miss them and the money stays gone. Hit them and you get it back. This video is a stopwatch. We start it now. Here's what happened. Someone moved money out of your account without your permission. Not you, not your spouse forgetting to tell you about a purchase. A stranger, or a bot, or a very confident hacker. This is an unauthorized electronic funds transfer. Regulation E defines that as a transfer you didn't authorize and from which you received no benefit. No, buying cryptocurrency from a guy on Telegram counts as receiving something of value, so it's not unauthorized. Neither do surprise subscription charges from an app you forgot existed if you originally signed up. That one's on you. So what counts? Debit card swipes you didn't make, ATM withdrawals while you were asleep, money vanishing through a payment app, AUK pulls from a gym you've never visited in a state you've never entered. All covered, unless it's a business account. Regulation E doesn't protect business accounts. Your LLC is on its own. Also, if you gave someone your card and PIN voluntarily, that's usually considered authorized, even if they bought 16 air fryers. It is painful, but legally authorized. Okay, you see the 0. First hour. You call the bank, not tomorrow, not after you calm down. Now, the fraud number on the back of your card, tell them money is gone, freeze the account, freeze the card, then send a written notice. Email is fine, a physical letter is better. Write down the date, the time, and the name of the human you spoke to. This paper trail is your oxygen mask. Without it, you're arguing with a chatbot that doesn't care. Now the stopwatch is truly ticking, because your liability depends on when you report. This is the part that decides if you lose a dinner or your rent. If your debit card was lost or stolen, you report it within 2 business days of learning it's gone. Your maximum loss is $50. That's it. $50, buy less coffee. If you wait longer than 2 business days, but still report within 60 calendar days of when the bank sends your statement showing the fraud, your liability can jump to $500. That's a plane ticket. Still survivable. But if you ignore the statement for more than 60 days, you could be on the hook for everything taken after that deadline. Unlimited liability. Every subsequent fraudulent transaction becomes your problem. The bank can just shrug. Sorry, clock ran out. Now, what if your card wasn't stolen? What if someone just got your account number and initiated transfers online? The rules shift. For those unauthorized transfers, you generally have 0 liability if you report within 60 days of the statement date. 0, full refund. But after 60 days, again, you might eat the whole loss. So the 60-day window from your statement is the real shield. The 2-day rule is for when you know the physical plastic is in the wind. Let's zoom in on the bank's side. You reported. What happens inside the machine? The bank must acknowledge your claim within 10 business days, not calendar days, business days. Weekends and holidays don't count. They then have 10 business days to investigate. If they can't finish in 10 days, they have to give you provisional credit. That means they put the disputed money back into your account temporarily while they keep digging. This usually happens within 10 business days. For new accounts opened less than 30 days ago, the bank gets 20 business days to provide provisional credit. For foreign point-of-sale transactions, they can take up to 90 calendar days, but the money is back in your pocket during that time. If the investigation finds an error, the credit becomes permanent within 1 business day. If they find no error, they take the money back and send you a written explanation. You'll hate that letter. What if the bank denies your claim? They say the transaction was authorized, or you waited too long, or the payment app says it's not their problem. Now you escalate. You can file an internal appeal. But the real weapon is the Consumer Financial Protection Bureau. The CFPB, You submit a complaint online. The CFPB forwards it to the bank. The bank has 15 days to respond, and banks despise CFPB complaints. It's like getting audited by a very patient, very federal librarian. It triggers paperwork, regulators, maybe fines. The threat alone can unstick your money. You can also complain to the bank's primary regulator, the OCC, the Fed, or the FDIC, depending on the bank's charter. It's a longer road, but it works. Now, before you celebrate, there are traps. Big ones. Giving your PIN to a friend, even a trusted friend, often voids your protection under regulation. If you authorize a payment to a scammer who promised you a puppy and delivered a PDF. That's typically not considered unauthorized. You initiated the transfer. Being tricked sucks, but the law sees you pushing the button. This is called authorized push payment fraud, and the US doesn't have a blanket reimbursement rule for it like the UK. So if someone calls pretending to be your bank and you read them the code from your text, the money is probably gone. The bank will say you authorized it. They're often right legally. Also, debit cards are not credit cards. Credit cards have different protections under the Fair Credit Billing Act. With credit, your liability for unauthorized use is capped at $50, period. With debit, the clock and the type of loss decide your fate. Treat your debit card like a loaded weapon. Keep it holstered. So you've made the call, you've frozen the account, you've sent the letter. What now? You wait, but you also watch. Check your account daily. If you see the provisional credit appear, breathe. If the bank misses its timeline, remind them, politely, then less politely. Then cite Regulation E by name, say you're aware of your rights. Suddenly, the customer service rep's tone changes. Let's compile the emergency checklist. Step 1. Call the bank immediately. Step 2. Freeze everything. Step 3. Follow up in writing and save all records. Step 4. Know your statement date and count 60 calendar days forward. That's your absolute deadline. Step 5. Expect provisional credit within 10 business days. If it doesn't arrive, ask why. Step 6. If denied, appeal and file a CFPB complaint. Step 7. Never share your PIN or authorize a transfer under pressure. Here's the one thing to tattoo on your brain: the 60-day rule. From the moment your statement is sent to you, you have 60 calendar days to report any unauthorized transactions on that statement. If you miss that window, the law can withdraw its protection for those charges. It's the ultimate trap, and banks know it. They send you statements every month, partly because the law requires it, and partly because it starts the clock. Every statement is a silent countdown, so the stopwatch is in your hand now. You can't stop the fraud from happening, but you control the response. Regulation E is a clunky, bureaucratic machine. It has gears, deadlines, loopholes, and a deep dislike for human confusion. But it works if you feed it the right paperwork at the right speed. You are not helpless. You have a process, a shield, and a federal agency that can breathe down the bank's neck. You open the app, you see the 0, and instead of panic, you hear a stopwatch. Then you pick up the phone. The clock is on your side if you use it. Now go get your money back.